Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Tuesday, 7th of October. I'm recording the video 10 past 7 p.m. Eastern Standard Time. I was expecting some downwards movement for Tuesday's session, and I had warned it could take most or all of the session, completing a red candlestick. We have a red candlestick, we got downward movement, but it's a lot more than I'd expected. The target was 1950 and that was comfortably passed. This downward correction is incomplete. Overall, tomorrow I'll expect more downward movement. We've got a B wave up in the middle of it to go though. When this correction is a clear three-wave structure to the downside on the hourly chart, I will then be expecting the start of a low-degree third wave up to begin. The invalidation point is very close by now. If 1926.03 holds, I will stick with the main wave count and expect it's most likely we're going to see new highs. But if we see a new low below 1926.03 in the next day or so, then it's possible that we have a high in place. The intermediate wave 1 or cycle B is over. This is the main wave count at the daily chart level, which expects that intermediate wave 1 is not over and that it's got the final fifth wave up to unfold before we see a big trend change, and that it should end during this month of October. Within intermediate wave 1, minor wave 3 is very long and extended. It has a 2.618 Fibonacci ratio to minor wave 1. Minor wave 5 is also extending. I'm not expecting it to exhibit a Fibonacci ratio to minor waves 3 or 1 though. Within minor wave 5, minute waves 1 and 3 are both extended, so I will be expecting a short, brief fifth wave. And there is no Fibonacci ratio between minute waves 1 and 3, so I will expect to see a Fibonacci ratio for the fifth wave to either the first or third. At 2030, minute wave 5 would reach 0.382, the length of minute wave 3. I expect this first target is more likely because it's closer and I'm expecting quite a short fifth wave. But if price keeps rising through the first target, or if when it gets there the structure's incomplete, then I'd use the second target. At 2052, minute wave 5 would reach 0.618, the length of minute wave 1. Within minute wave 5, no second wave correction may move beyond the start of its first wave below 1926.03. We have this morning doji star candlestick pattern here, which coming at the end of a downtrend, even though it's a short downtrend, should indicate a trend change. And so that's a little bit more support for this wave count. These double aqua trend lines are really important, so draw them carefully on the daily chart. There are clear instructions every day in the text article on exactly how to draw them. The upper one no longer seems to be providing any support, and the lower one, if price got that low, should provide some support. If this lower aqua trend line is clearly breached with downward movement, I'd have a lot of confidence with a breach there. The intermediate wave 1 would have to be over, and intermediate wave 2 would then have to be underway, and it should find strong support and not breach the lower edge of the maroon channel. This maroon channel is a base channel drawn around primary waves 1 and 2. A lower degree second wave correction should not break below the lower edge of a base channel drawn around a first and second wave 1 or more degrees higher. This wave count expects a bit more downward movement to complete a second wave, and then an increase, a small increase in upward momentum for a third wave. Let's have a look at how this is unfolding on the hourly chart, where the end of minute 4 here is this point here. We have a 5-wave structure up, and so far now a 5-wave structure down, which could be complete here. This wave count expects a bit of upward movement for a B wave, maybe to find resistance at the upper edge of this channel, and then a little bit of downward movement for a short little C wave, most likely to at least move slightly below the end of A to avoid a truncation. The second wave can't move beyond the start of the first wave. If we see a new low below 1926.03 tomorrow or the day after, I would abandon this wave count in favour of the alternate, which I'll look at last in this analysis. This is a deep second wave correction, and they do tend to be rather deep, but this one is deeper than normal. That's okay, it is still somewhat normal. They are usually pretty deep corrections, second waves. And when they get really deep, they convince us that we haven't had a trend change, and they do that right before a third wave takes off in the opposite direction. So although this is deeper than expected, I will hold to this wave count because it does have the best fit, the best look at the daily and hourly chart level. When the second wave correction is over, and it could be over tomorrow, I'll expect the start of a minuet degree third wave up. When I know where it begins, I'll calculate a target for it to end for you. And I would expect the second wave to show on the daily chart as at least one red candle or doji. That's pretty normal. I will be expecting to see the subdivisions for minute wave 5 show up nice and clear on the daily chart. At the daily chart level, this is the bearish wave count, and it too expects a final fifth wave up, this one though at minor degree. The structure for primary wave C is seen in exactly the same way, an impulse, as is intermediate wave 1 for the bull wave count. So the short-term invalidation points, targets and expectations are exactly the same for both wave counts, and they won't diverge until this final 5 wave up structure is complete. If we see a new low below 1926.03 tomorrow, I guess it could be a continuation of minor 4 for the bear wave count or minute 4 for the bull wave count, but it's really difficult to see how that fits. I think this would be more likely. This also fits and works exactly for the bull wave count. It's possible intermediate wave 1 for the bull wave count could be over here, as could cycle B for the bear wave count. The problem is in this piece of movement. Minor wave 4 only lasted 7 days, and it's a double zigzag. Its counterpart, now off to the left of the chart, minor wave 2, lasted a total 14 days or sessions, and it was a single zigzag. So there is very poor alternation between them and not good proportion either. The main wave count, which sees the fourth wave is much bigger and an expanded flat, does have perfect alternation and much better proportion, and that's why it's my main wave count. From an Elliott wave perspective, this wave count is possible, but it has a really low probability because of poor alternation and proportion between this fourth wave and its counterpart second. But if we see a new low below 1926.03, I wouldn't want to try and consider it a continuation of the fourth wave. I would rather see a trend change up here. For the bear wave count, that's huge, and we would need this confirmed with a very clear weekly candlestick below the lower edge of the maroon channel and not touching it. Only at that stage would I discard the bull wave count and expect that market is in the early stages of a huge crash. We are certainly not there yet. That's all from me today with your S&P analysis, and I hope that all our members are having an awesome day.